Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it way back in 2003, over 20 years ago, to provide advanced technical analysis, market commentary, trade ideas, and sophisticated mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems with about 90% winning trades, and of course our amazing KISS systems, which I've been discussing. Totally automated, will alert you when to get into positions, where to set stops, when to get out. You can see, for example, Coinbase, that's a crypto stock. The trade is up 80.5%. The system went long on February 8th, and the current stop that it's using is 201.90, and it's raised its stop 11 times. Amazing resource. The other thing I want to bring up is, those of you who follow me on YouTube, again, consider subscribing to our website. If you do subscribe to us, please reach out to me. I can be overwhelming at first. We provide 5 newsletters per week with 50 to 70 charts, dozens of trade ideas, all these mechanical systems. It can be overwhelming at first. All right, so please reach out to me, because it can take some time to get a feel for everything. And that's another one thing I want to mention. On our website, we do have various subscriptions. They're all the same thing, but we have anything from a monthly to a introductory. This is a trial. But quite honestly, this trial, in my opinion, is where you get 3 weeks, is really just not enough time to really get a good feel and figure out everything. I'm almost considering getting rid of this. I suggest everyone at least do the 6-month subscription, because that gives you enough time to really understand everything. Because again, a lot of overwhelming information here at first. And like I said, if you sign up and you need help, feel free to reach out to me from our support page. Contact us. I can do phone calls. I can set up a private Zoom meeting with you where I answer your questions and go over everything on the website with you. Okay. Anyway, let's get back to this video. Again, this is going to be a technical analysis review of the markets and our trading systems, and it's Sunday, March 10th. It's in the afternoon, and this is our back-end recording for our web page format. So I'm going to go ahead and get this recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend so far. It's Sunday afternoon, about 2 p.m. Central Standard Time. Of course, this is the comprehensive weekend newsletter from Breakpoint Trades. Again, it's Sunday, March 10th. Also, I want to thank everyone who've sent all the condolences to me. I've gotten, dozens and dozens of text messages and emails, private messages. As you know, my dad passed last week, so I've been dealing with that. And so again, I appreciate all the condolences that you guys have sent me. Again, it's a tough time. We all go through it with our parents. Some of your parents may have already passed and you've dealt with that. Some of you, your parents are still alive, but we all end up going through it. It's a part of life. But again, I appreciate all the support. The one thing that's tough for me a little bit is I'm so used to just giving him a call randomly, and I still catch myself starting to call him until I catch myself. So again, I don't think that's common, but that's the stuff I've been dealing with. Anyway, back to this newsletter. Again, this is the weekend newsletter report. If you're new to Breakpoint Trades, these tend to be quite comprehensive. Anywhere from 40 to 50 minutes usually these weekend newsletters will take. The intra-week newsletters are much shorter for obvious reasons. On the weekend, we go over a lot more stuff. But this newsletter is broken down into 7 major table of contents. So I'm going to do my opening discussion. We'll also mention the KISS systems. Then we're going to go and move to the general market analysis. And we're going to cover the major indexes in a top-down fashion. We'll look at some monthly, weekly, daily, all the way down to 2-hour, 60-minute time frames. We're also going to look at some of the big cap stocks like NVIDIA, Microsoft, Apple, Google, also Tesla. Looks like I got NVIDIA listed twice here. Also, guys, given what the market is, as you know, the market has been in a hell of an uptrend from the late October lows, right? Been a hell of a 4 months. That said, I do sense things are getting kind of tired here. I'm starting to see the market being a little more loosey-goosey. We're starting to see some of these larger cap stocks leak oil. Doesn't mean we can't continue to push up. The trend remains up. We haven't broken any supports. We're still above the 9 EMA in all the indexes, but I'm starting to see some signs of weakness. And so it's time to start looking at some hedging ideas, at least for hedges, maybe some aggressive shorts if you get a trigger. So the inverse ETFs I'm showing tonight are SQQQ, that's the triple inverse ETF for the Qs, SPXU, that's the same but for the S&P, and UVIX, that's the volatility. All those look pretty good for potential trades. Oh, and FNGU, that's the FANG inverse ETF. Okay. We'll also look at some custom indicators. We'll look at the bond market. We'll do a sector snapshot overview. We'll look at the US dollar, commodities, cryptocurrencies, precious metals, GDX. Then we'll follow up with some individual stocks. Again, otherwise for the week, the market major indexes, most of them did close down. S&P lost about 0.25% for the week. Qs lost 1.5%. Again, we've been seeing some weakness in some of those big cap tech stocks like Apple and Google. Dow Jones was down 0.9%. Now the Russell IWM, it outperformed. It still gained about 0.5%. Okay. But again, nothing's changed with the market trend. It's still in the uptrend. The KISS systems have done their job, what they're designed to do. They get in a trend, they stick with it, raise the stops. So the KISS systems have caught this trend extremely well, and they have nice tight stops. So when the rug is eventually pulled, you got an exit plan. Okay. Let's see, I already discussed some of these things. Again, like I said, the major indexes haven't broken any support yet. The S&P 500 is still holding its uptrend line of a potential wedge pattern. The Qs are holding their uptrend channel. So realize that the slope of the moving averages on all these charts are strongly upsloping. So what does that mean? Whenever you have a strong upward slope, you don't start extended downtrends from such a position. Okay. Now, that doesn't mean you can't have some pretty big down days, 80, 90 point S&P 500 down days where you get a, rug pull. But you don't start your extended downtrend. That'll occur once we break some supports and when we break symmetry, uptrend symmetry. So on the S&P, we need to pull back larger than about 130 points off the highs to break the uptrend symmetry from the October lows. For the Qs, we need to pull back larger than about 18 points. If we get that on the next sell-off, then that will likely point to a lower high in the next rally, and that's where you get your, the bearish break in symmetry. That's where you get your stronger correction. Okay. Other things, crypto, as you know, has been on absolute fire. KISS systems have been long those crypto stocks with the smart trailing stops and are just killing it. Precious metals, man, a couple weeks ago I mentioned that area was looking good. I discussed a bullish setup in gold and some of the mining stocks, and they have done awesome. Hope you guys caught that. That said, they do look a little bit tired here in the short term. Okay, let's go ahead and move on. So first I mentioned below, item number 2, again, I just want to reiterate the KISS systems. So remember, in the KISS systems, you go to the systems section, KISS STS tables. As I stated, make sure if you haven't done so, it's not set up this way by default. You need to click to receive live alerts. And when you do that, you'll receive email notifications and eventually text messages to your email about this things that you've set as favorites, whether it's S&P 500 or AMD or NVIDIA or whatever you decide to follow. It'll tell you what the system's doing. It'll tell you when it enters. It'll tell you where to set a stop. It'll update you every time there's a new stop. It'll tell you when it gets out. It's an awesome resource, but you need to click that to receive those automatic notifications. Remember, we added the KISS systems have been live in beta for about a year. We've had the daily versions. We have weekly now. Make sure to check those out. Again, it's kind of like KISS systems. It's the same KISS system, but on a weekly time frame. So they hold for longer periods of time, sometimes 1 or 2 years. For those of you who want, very few signals, that could be an option. We have an extensive FAQ, and we're going to be adding this premium section very soon. So again, make sure to check all that out. Next, showing you some examples of the KISS system. So here's NVIDIA from the KISS system. Went long back on December 28th. We see the vertical line here. And you can see it's caught this whole uptrend. Now, Friday was a big reversal day, bearish engulfing candle there. You know, the smart trailing stop is still 811. System trades up about 875% right now. Obviously, it was up quite a bit more before that reversal on Friday. But again, the stop is protected here. You know, if NVIDIA sells off and hits that stop, it's still a wildly profitable trade from the entry. And if it recovers here and goes back up, well, the system will just stay in it. Next, here's NVIDIA on the weekly KISS. So on the weekly KISS, it went long way back on October 28th, 2022. Look at this. And that trade is up 535%. Now, we didn't have the weekly live then, so that's, you know, unlike the daily, but that's what it would have done. And, you know, you could see it going long there, setting the stop and keeping that stop wide enough not to be hit, right? And it's still in that trend that entire time. It's raised its stop 30 times. Pretty awesome stuff. Here's ANF. Now this one just closed out on Friday. The trade, it closed out a 213% profit, and this has been a live trade, okay? You know, the system went long last year when this was, all the KISS systems were live, and you can see it just raising that stop all along. In fact, it raised the stop over 40 times. That's rare to see that. Normally, you're not going to see that very often, but it can happen. Pretty amazing. And it finally stopped out, it looks like, on Friday. Still wildly profitable trade. But that's an example of what the KISS systems can do. I also mentioned this, guys. I do think the market is getting closer to a correction. Remember, the KISS systems are long only. So when we do have a correction, we're going to see a lot of the KISS systems start to hit their smart trailing stops and go to cash. And, you know, you may also get a couple whipsaw trades here and there. You know, the KISS systems work amazingly when we're in these nice uptrends. When we go into corrections, they're much less active. So I bring that up because if you happen to be new at Breakpoint trades and you're just starting, you missed a lot of this big run that we've had over the last 4 months. And, you know, they may be more choppy now during a correction. So you got to realize that, and that, you know, and not overly judge the systems if they go through some chop period. Again, because they've been in this extended uptrend that they've caught. Next, back to the general market analysis. So that's enough of the KISS systems. I know I've been covering them ad nauseum, but I just want to keep reiterating these things, guys. So anyway, back to the general market. Here's the index sector table, what transpired last week. You can see Friday was a nice down day for the indexes. For the week, most of the indexes were down, as I already discussed, except for the Russell, which was up about 0.5%. The Nasdaq led to the downside, as you can see here. Nasdaq 100 down about 1.5%. As far as the 21 market sectors we follow, for the week, still most of the sectors ended up positive. The weakest sectors were consumer discretionary, retail, and technology. Transports were down a little bit as well. Banks had a good week, up 3%. In fact, that looks like that was the strongest sector for the week. Currency-wise, US dollar sold off almost 1% last week, and that has helped the precious metal market, which has been on fire. Cryptocurrencies have been on fire, as you know. See Bitcoin up at 68,000. Ethereum's really been coming on strong. It's up almost at 4,000 now, 12% last week. Commodities, kind of a mixed bag here. The index was up 0.3% for the week, just slightly, but crude oil down 2.5%, gasoline, natural gas. Otherwise, strength in copper and some of these ags, except for wheat. Now, precious metals, again, had a great week. Gold up 4.5%, silver up 5%. GDX, the gold miners, up 8.5%. The stocks have been leading for the last couple weeks. That's been a great positive. As far as the bond market, nice pullback in the 10-year, 30-year Treasury yield last week. That's been helping the market too, and helping the precious metals. Next, image number 7. Here's the economic news calendar. So plenty of things on the docket this week, just like last week. So today is the 10th. So on Tuesday, the big one is CPI, core PPI. And then on Thursday, we'll have PPI, core PPI, retail sales, stuff like that. All right. Let's go and jump to these index charts. First chart below, item number 8 is the weekly snapshot of the 5 key major indexes. We'd like to start off with this. So again, most of the indexes, major indexes, were down for the week. Again, they're still holding their respective 9-week EMA. Okay, you can see that. That's the first major support, is that 9-week EMA on these weekly time frames. Okay, heck of a run, of course, from that late October lows. We had those kind of flag channel patterns, which we broke out of, and this has been one hell of a run. Next. Chart 9, here's the monthly view of the major indexes. So as you know, as of February's close, we had 4 up months in a row. Again, there's been times when we've had 5 months up in a row, but it's pretty rare. You get 4 to 5 months in a row, you start to, odds start favoring some sort of correction. So for now, this month, the Dow is down slightly. We have some doji candlesticks here on the S&P and Nasdaq, so struggling there a little bit. And finally, here's the daily version of those same indexes. Again, you can see those major lows at the October lows, awesome uptrend. Here, again, getting a bit tired. We're still holding the 9 EMA on the S&P. We're a little right around it at the Nasdaq. We're below it on the Dow. The Russell's still holding up fine. Let's go and look at the individual indexes. So here's the Dow Jones. So I went ahead and just left this trend line here. You can see we're slightly below it. But we're still above the 50. So if we start to sell off here, the 50 MA would be your first target. Again, we've had this MACD divergence building. One thing I want to point out is the MACD is now getting closer to the 0 level. In my experience, whenever you have a divergence on the MACD, but it's way above 0, you see back here in late December, you had a slight divergence there. But that only resulted in more of a very shallow sideways pullback. However, it's when the MACD starts getting close to 0 and you have that divergence, that's when it's more vulnerable to a bigger correction. Again, it hasn't started, but it's something to be aware of. You could also see the 60 stochastic is testing the 80% area, potential support, but if it loses that, that would be a negative. Again, the moving averages, you can see they're all very strongly upsloping. So whenever you get that, you don't just crater in the market. But if we do sell off and break uptrend symmetry, that'll be important. Next, image number 12. Here's a weekly version chart of the S&P 500, which was down 0.25%. Basically, you have an indecision doji here. So we'll see what the market does with that this week. Again, obviously in a very strong uptrend, but a little indecision doji. On a really good correction, by the way, this area around 4,800 would be a great support area. Next, chart 13, here's the daily KISS system for the S&P. Again, no changes. The smart trailing stops around 49.50. Okay. And the system went long on October 31st. Was an excellent trade. No matter what happens with the market, if the market were to sell off here and hit that smart trailing stop, it's wildly profitable from that entry. Again, like I said, the KISS system can once in a while have a little whipsaw. That's why I mentioned in my opening comments that if we do enter a correction, we could see some things like this happen where you see some things take a position and then get out for a minor loss. Okay. Again, it's been very easy the last 4 months on this very strong uptrend. But just realize that when we do go into a correction, we could get some chop on some of the systems. All right. Again, that's just normal, but it's important not to overly judge the systems on that because they've had one hell of a move here. All right. Next. Image number 14, here's the 4 time frames with our custom indicators, the moving average, ribbons, the cycle indicators, etc. Nothing really on the daily and half day. We're still holding the ATR support. One thing I want to point out, guys, is the 130-minute and 78-minute time frames. So the cycles. Notice how price has been perfectly ping-ponging between these cycles. Just absolutely perfect. There's the 130-minute. Look at the 78-minute. You can see late last week, price pulled right off from that resistance cycle. This is important because it's really in sync with the market, the cycle indicator here. When it finally breaks through one of these cycles, that'll be important. So for example, if we get a support cycle that shows up here and we close strongly through it, that could be an indication of a breakdown. I'll let you know if that happens, but that's something that I'm going to be monitoring. Next, image number 15. Here is the S&P 500 daily. Again, we're still in this tight wedge. As you know, we've had this divergence building for quite a long time on the S&P, like for the last 3 months. That's why divergence is not a sell signal on its own. That said, we are getting stretched. Look how tight these trend lines are now. We're still above the 9 EMA. In fact, you have a second divergence here. I don't have it marked, but with this last high, you could see a divergence from that RSI peak in February to the recent peak. So definitely definitely looking a bit tired. Again, it's still uptrending. It could continue to uptrend, but just watch this. One thing to watch is the uptrend line here and the 20-day moving average. Okay, keep an eye on that. Now, in order to break the uptrend symmetry, you need to pull back larger than about 130 points. That's been the largest pullback in the uptrend from the October lows. Okay, if we eventually when we have a pullback larger than 130 points, let me get my drawing tool out here. Okay, when we eventually do get a symmetry break, okay, that then gets you very high odds at a lower high in the next rally. So the way I like to trade these things, if I get a short, great. But then if I get a symmetry break, I'll go ahead and take profits, and then I look to reestablish on that lower high bounce, because that's your much better short that you can hold for a swing trade. Any shorts up in here are more just short term, because again, what you don't, before you get a symmetry break, you don't just sell off like this. That doesn't happen unless there's some black swan event or something. You break symmetry, then you form a lower high. But those will be things I'm watching. Again, none of that has happened yet, but you could definitely see the wedge here is looking a little more complete. Next, image number 16, zoomed in daily view of the S&P. Again, just up and away. Here, there's a little support area to monitor. We'll see what happens here early this week. Next, chart 17, here's a half-day chart, 195-minute. Again, one thing to monitor is this uptrend channel. We're still holding that. A couple of triggers, though, I'll be watching for triggers, breaking this channel line or breaking this trend line on the RSI. Remember, trend lines on the RSI can give excellent signals that would probably match a break on this channel. You can see the MACD divergence there that's been forming. So keep an eye on this. Next, chart 18, here's the 2-hour view. Shows you the same channel, essentially. And you can see your triple MACD divergence there. Next, chart 19, here's a 60-minute chart of the S&P. Again, you can see this channel. Again, it's possible that we could have completed a little fifth wave high there with that last push. Not confirmed yet, but just something to be aware of. Again, we could still continue to push higher, so until we break supports, but definitely it's time to start being a bit more cautious. Next, chart 20, here's the triple Qs. This is the daily. Again, we're still in the channel here, just like on the S&P. The symmetry for the Qs is about 17.5 points. Let's round out to 18 points. So a pullback off the highs larger than 18 points would break this uptrend symmetry and likely establish then a deeper pullback. That's something to watch going forward. Next, chart 21, here's another daily view of the S&P. This one has various wave counts on here. Don't get bogged down in all that, but you can see, get a potential little wave C5 here, or you can make another high, but just something to monitor, but again, don't get too bogged down into this. Next, chart 22, here's the weekly chart of the Qs with that wave count that I've liked since early fall. This nested 1, 2, 1, 2. So been working on this wave 5 of major 3. Once that, as I stated, once that's complete, I'm looking for a deeper wave 4 correction, which again could unfold like this. It could also be a coil. So it's either going to be a zigzag or a coil. It's not confirmed that we have the wave 5 of 3 yet. But once we do, I'm looking for a multi-week correction, because this is a larger degree wave 4. But not to end the bull market, I'm still looking for, then once that's over, looking for a new all-time high again. Next, chart 23, here's the KISS system. Again, no changes. Nice pullback on Friday, but smart trailing stops around 427.70. system went long back here. Just a couple days off the lows, did an excellent job there. Next, chart 24, here's the 4 time frames. Again, just like on the S&P, just 130 minute, 78 minute. Take a look at the cycles here, how price is ping-ponging. Price stalled right at that resistance cycle late last week, which I pointed out. So we're going to watch this going forward. So the next time we get a buy cycle here, well, let's see if it bounces off of it or instead breaks through it. Chart 25, here's a 2-hour view of the Qs. Now, again, you can see it looks a little more wedgy here, right? I could see this breaking down. I could also see this maybe trying to rally up again in here, but either way, it's wedging. So like I said, a little more caution in order. One to watch this week. Next, chart 26, here's the 60-minute view showing this wedge that is forming. Again, we had a pretty good sell-off late last week. We'll see if we can get a bounce up in the wedge, but it is starting to look a little bit more precarious here. And finally, let's talk about some hedging ideas. So with the market getting a little more extended, especially if you're loaded with longs, it's again, you should start to monitor these inverse ETFs. So here's SPXU, that's the triple inverse ETF for the S&P 500. Again, it's still in a channel, hasn't broken it. You can see a nice pickup in volume on Friday. You've had this divergence that's forming. And on this last low here, you get a little RSI 14 and RSI 5 divergence. I took a little bit of this home. I bought a little bit last Friday. We'll see. I'll add to it if it can break through resistance, but it's definitely something to watch now. Chart 28, here's a 2-hour view of SPXU. You can see the MACD divergence there, last week's lows. You can see kind of a wedge trying to form. Next, chart 29, here's the SQQQ. Of course, that's the triple inverse ETF for the Qs. Again, same channel. Definitely something to start monitoring in here. Here's a couple others, guys. Here's FNGD. That's the FANG triple inverse ETF. And you can see a nice little bottoming pattern here. Good volume on Friday. Little base, a breakout over this $4 range. My targets would be $4.50 and all the way up here in the low 5s. So there's another one for you. And the final hedging thing is UVIX. That's the double inverse or the double long VIX ETF. So you can see it wedging here. You can see the volume pickup. Definitely looks like it's trying to bottom in here. So there's 4 ideas for you guys to monitor if you're looking for some hedges or some aggressive shorts with a trigger. Next, let's take a look at some of these big stocks. Here's NVIDIA. As you know, NVIDIA has been carrying the whole market essentially. It's been the AI craze. So NVIDIA hit a high of 975 on Friday, reversed. Big bearish engulfing candle. Now, could that be the top? Or could it still, come down and go up? Never did tag the 1,000 area, which bothered me. Markets like to tag those big round numbers, but definitely not a pretty candle here. And we know we've been working on this wave 5 as we stated. Next, chart 33, here's Microsoft. Now it's still holding up fairly well here. It bounced off the support last Wednesday. Again, the key is this 50-day moving average. Look at this. Been very important support. So the bullish view short term is this is a wave 4. We would get another move up in a wave 5. Okay, that's definitely a possibility, right? The other thing, if we break this 50-day moving average, then to me, this is no longer a wave 4, and that would be more bearish. So we'll see which way this breaks. Next. Now, what's been weak is Apple. So here's Apple. Had this descending triangle pattern, which played out for a nice short we had on our watch list. It did bounce a little in that demand zone last week, pulling back a little bit. Chart 35, here's the daily chart of Apple. Again, been downtrending, trying to bounce a little in this demand zone, but definitely not pretty. And it's something to monitor, guys, because we're starting to see some weakness in these bigger stocks. By the way, the KISS system has been out of this. Okay. Chart 36, here's the monthly chart of Apple. So in Apple, my concern long term, again, it's had one hell of a run over the last 20 years. you do have a big old monthly MACD divergence here that's been setting up. That could produce a bigger top over time. This could be a long-term demand zone down here. Just something to think about. Also, you could watch this RSI trend line. If that were to break, that would be important too. Chart 37, here's Google. This has been downtrending as well. Now, it did bounce here around the 200-day moving average. And chart 38, Amazon. Now, this is still holding up very well. It's kind of wedging now. You got a MACD divergence here on this wedge. And of course, Tesla. Tesla's been super weak, as you know. Downtrending. There's a big demand zone down here, and there's an open gap from early 2023 that could also be a target, right? So these are, some of these bigger stocks have been weakening, guys, or they could start to weaken, such as Amazon, if that were to break the wedge, stuff like that. So that could all affect the market, obviously. So be aware of that. Next, let's move on to the small caps. Here's IWM. This one managed to close up about 0.5% last week. Now it is into a supply zone here. Chart 41, there's the daily chart. Kind of broke out of that little coil that we had in place. Moved up a little bit. Again, we have some big divergence here that's setting up. And finally, chart 42, here's IWM on the 2-hour time frame. It's wedging here. There's some divergence. Potential little wave 5 there. So again, all things to be aware of. All right, guys, it'll be interesting to see what happens early this week on those indexes. We'll keep you abreast. Let's move on. So here's the VIX. VIX not really saying anything yet. It's been meandering higher. Again, we had those 5 VIX Bollinger Band buy signals over the last few months, which obviously played out. Right now, you don't have any signals or anything. Chart 44, here's the S&P versus the SVXY inverse VIX ETF. Again, you can see how they move together, obviously, so it's something to monitor. And you can see here a little divergence forming where the S&P has been declining here, and this hasn't so much yet. So again, let's keep an eye on that. Chart 45, here's the S&P large advanced decline versus the small advanced decline. You have this big old divergence that's been forming here between the two. Chart 46, here's the NYSI 9 EMA crossover system. So this is, to me, I'm going to be monitoring this as well for a confirmed trigger. Whenever this crosses back below the 9 EMA, I think that could be an excellent sell signal because of this divergence that's been building. All right, and again, guys, remember the inverse ETF for the FANG stocks that I gave. That's another thing you should monitor as well. Next, moving on to the bond market, here's the 10-year Treasury yield. Remember, I've had this in place as kind of an ABC, and that ended up playing out. So that was a pretty good analysis that I did a month ago. I was looking for this move up in a C, lower high, and so far this has been playing out. Chart 48, here's the big picture view of the 10-year Treasury yield. Again, don't get me wrong, guys. Remember, interest rates were in a 40-year secular bear market, which began in the early 1980s. It ended when it broke this 35-year channel. So now the secular long-term trend is up for interest rates. Okay, again, it's not going to go straight up. You can see it rallied to around the 5% area where it's been pulling back. One thing I've been postulating to some kind of thing like this, where rates do pull back eventually down into here, but then find support and then rally again eventually. That'll probably be the next bear market when that occurs. Okay. Next, chart 49, here's TLT 20-year bonds. Again, they move opposite of rates. Still in this channel we've had in place. And chart 50, here's TLT on the monthly. Again, it's inverse of the interest rates. So the opposite, they're in a secular bear market. Like Mitch talked about that wave 5 low back in October, which has been playing out. And I've been this has been the pattern I've been favoring, this ABC up over time, but a lower high. I haven't changed this chart. Chart 51, here's high yield corporate. Again, it did break out to a new high out of this tight coil. Unless this starts running away, it could end up in a MACD divergence. You can see how the MACD is lagging this. All right, guys, let's look at the market sectors. Driver 52, semiconductors. They've been the super strong sector lately. Big reversal on Friday, obviously, especially with that move in NVIDIA. No MACD divergence here, but it was getting a bit parabolic. Driver 53, here's XOK technology. Again, continues uptrend, but look a little more precarious here. You can see a little potential wedge to monitor now. Obviously, MACD divergence at that highs. Driver 54, XLF financials. They have had one hell of a rally. Steve drew a little tight wedge here, but man, they've been super strong. Definitely is diverging though. Now, as far as financials, banks started coming on last week. They were the strongest sector. Broke out of this pattern finally. There's an open gap up here from early 2023 that could be a magnet. Driver 56, transports. This cup and handles played out nicely. Looking a little tired here. Still holding the 9 EMA for now. Driver 57, industrials. Still uptrending. Been one hell of a trend, but quite overbought. As you can see here, a little divergence on the RSI showing up. Driver 58, home builders. Also one hell of a move, but looks kind of tired here. Driver 59, healthcare. Boy, hell of a move off that lows. Look at this steep uptrend channel. Definitely a little overbought, obviously quite overbought. Again, guys, I'm just trying to give you an overview of what things look like. Again, most things still look okay, but you know, XOK looks a little vulnerable. Here's materials. They've been super strong, pulling back a little on Friday. Driver 61, utilities. They've been strong lately with that move in the interest rates. Nice move out of that pattern. As far as the energy market, this continues to hold up well. XLE continues to push up in a potential little wedge. Nice move out of the channel. Driver 63, oil services. Nice move out of the channel. Struggling a little bit here at the 200-day moving average near the symmetry. Some individual names in the energy sector we've liked are VLO. Kind of had a cup and handle look. It's still moving higher. Looks good. Driver 65, the big one, ExxonMobil. Again, this has been a really easy long from January there. Higher lows in place. Nice move. Just stay long. Keep your stops. You could also see where the KISS system has a stop. And Driver 66, S&P 500, S&P gas and oil production. This is the monthly chart. I like this big monthly coil forming. Eventually, this is going to break out in a big way. So I like this one. But again, it's a monthly chart, guys. You're not going to get instant gratification from this. Moving on to commodities, here's Driver 67, DBC, weekly view up 0.3%. Driver 68, crude oil, pulling back on Friday, kind of pulling back off that resistance area. Driver 69, natural gas, down 1.6% for the week. Again, it rallied off that long-term support, but stalling here at the 9-week EMA. Remember, natural gas also bounced off this essentially 28-year support going all the way back to 1995. And here's the daily chart number 71. You know, was very oversold here, pulling back a little bit. Now we'll see what it does. Natural gas is notoriously difficult to trade, guys. It really is. They call it the middle widow maker for good reason, but it was a pretty low risk buy off that 28-year support down there at the $1.50 range. Driver 72, here's copper, still in this big old weekly coil pattern, up about 0.8% for the week. Driver 73, DBA, still holding up well here. It's kind of coiling. Really nice long out of that pattern from January. Driver 74, there's the weekly view, this cup and handle that's been playing out for the last month and a half. Looking at the crypto market, it's been on fire. Here's Bitcoin, up 10% for the week. You know, now it's at a new all-time high, taking out that previous 69,000 high. Here's the daily chart again. See, it's now in the 70,000 range. Just been one hell of a move. Ethereum's really come on strong here, playing catch up. This has been the big runner lately, hit 4,000. As far as the long ideas, we've had Ethereum Grayscale on our website as a long at $20. It's now $35. One hell of a move. Some other ones, MSTR was a long pick of ours back here. Hell of a move. You could see hit 1450 last week. Now, little RSI divergence showing up here. Definitely looks quite extended. Jabber 80, Coinbase, another hell of a rally. Kathy's favorite, but one hell of a move. Congrats for those of you who've been riding those crypto stocks. Moving on, here is US dollar. Nice sell-off the last couple weeks. Broke that support last week. That's been helping precious metals as well. And let's look at the precious metals area, which has had a hell of a move. Here's gold up 4.3% for the week, smashing through that resistance zone on a good closing basis. Remember, late last year, we had that spike up to 2150. It was kind of an overshoot, but this is a real one as it closed there. Jabber 83, here's the daily view of gold. Again, hell of a move out of this ABCDE coil, as you can see. Straight up move. You also had confirming signals on the GDX-GLD ratio trendline break and the RSI trendline break. That said, look at those sky-high RSI indicators. We are quite overbought, extended here in the short term. But again, I view a pullback as a buying opportunity in this area now. Jabber 84, here's another weekly chart of gold showing the same thing. This one has the ratio. The other thing I also want to see, I want to see this ratio eventually break this channel. Okay, remember that measures the strength of gold stocks to gold. Finally, Jabber 85, here's the monthly view of gold. You have this big, the very bullish view is we're working on a wave 3 here. Wave 3, 4, 5. If this is the correct pattern, I could see gold eventually going up to $3,000. Yeah, it's not as exciting as cryptocurrencies and Bitcoin, but still, I've always stated I think gold will have its day, and I think it's started. Next, Jabber 86, here's silver, still in the same pattern here. Nice rally the last couple weeks. The better way to look at silver, though, is this monthly chart, this 4-year coil that's been forming. So far, it's up 7.5% for this month. An eventual breakout of this coil could really set a run. We could see silver eventually tag its 50 all-time high if it breaks out of this monthly coil. Remember, this is a 3-year coil, 4-year coil, actually. Next, looking at the gold stocks. Jabber 88, BPGDM. I pointed this out 2 weeks ago. This went on a buy signal. This is a system, BPGDM system. It gives very clean buy and sell signals. It's not always perfect. You see a little whipsaw there, but been very good over the last year, year and a half. Excellent buy signal there in that oversold territory. Jabber 89, here's GDX, gold miners itself. Again, hell of a move since breaking that channel. Rallied off this demand zone. Here I added fibs. Very short-term, guys. I'm cautious. It's rallied up to the 61.8 fib. You got a black candle. This looks a bit extended, honestly. If we get a pullback here, something like a 3-wave, I think it's one hell of a buying opportunity, something like that. So keep an eye on that. Again, you had confirming buy signals in the ratios here. We just are a bit extended, and we're at that 61.8 fib where I get cautious. Jabber 90, here's the 2-hour view of GDX. Again, beautiful move. It's up into the supply zone, so that is some resistance. You can see the MACD is crossing down, so you're losing some momentum here. Jabber 91, here's a 60-minute chart. Again, you can see how wide the moving average ribbon is. You can see the MACD divergence that's forming. So like I said, doesn't mean it can't push more here, but it is getting a bit frothy short term. But don't get me wrong, I like it long term. GDXJ, that's another ETF in this area. Again, hell of a rally off the demand zone. Again, straight up move, maybe a bit extended. Jabber 93, SILJ, same deal. Nice move off the demand zone, but right into the declining 200-day moving average. So it could be an area to at least pause, pull back some. The individual names I've been showing is AU. Remember, this is one I liked 2 weeks ago. It's moved all the way. It's hit 2 of my targets already. Great job if you traded that. Jabber 95, DPMLF, another one of these. This is a less well-known gold stock, Dundee, but it was a nice move. You can see finally pulling back a little bit. I like the weekly chart of Dundee. You get basically at an ABC. And it's held up very well over the last 3 to 4 years, unlike a lot of the stocks. Looking at some others, EXK, it's a silver stock. Remember, this has been an excellent trade from that little trend line break. Looking a little tired here short term, so maybe take some profits, look to buy a pullback. Driver 98, RGLD, Royal Gold, one of the major ones. Nice rally off the demand zone, but notice the declining 20 or 50 and 20 MAs here. So resistance up in here would be a logical area for a pullback. Driver 99, FSM, same deal. Hell of a move off that area. Taking a look at some others, here's Newmont. Now, Newmont's actually the largest component of GDX. It doesn't honestly have a great looking chart on the daily. When I look at the weekly, notice it bounced off that long-term support from the 2020 lows. So it did bounce off long-term support. And the other big one is Barrick Gold. This is the weekly chart. You can see it bounced off the demand zone. So these are a couple of the larger ones to monitor. And guys, let's follow up lastly with some other trade ideas. So just following up on some of these, Advanced Auto Parts was a long idea of ours a couple weeks ago. You got a potential also big inverse head and shoulder pattern. Driver 9103, Dollar General, with inflation the way it is. A lot of people have been shopping there. Long idea of ours back in February, really nice move. It's more than hit my target. So just trail your stops up. Driver 104, True Value, for TransUnion, I mean. Another one that was a long idea of mine back in February, ascending triangle. It just continues to move up, higher lows, just trail the stops up, stick with the trend. Driver 105, ES, Energy Eversource, finally breaking out of this little flag pattern, nearing the 200-day moving average. Otherwise, my target's up around that supply zone. Driver 106, Turn. This is a new one from last week. Had a couple Pinocchio moves through that resistance. Still looks okay. If it can clear that, target's up around 10 bucks. Driver 107, Mobley. One to monitor. You can see stalling right at the declining 50-day moving average, but if it can break that, it could be a quick long. Here's a couple new setups, guys. Zim, short idea. Target would be this supply zone down here at 9.5 to 10 bucks. Driver 109, Comp. Kind of an ascending triangle pattern. Very strong stock if it can clear that $4 range. Driver 110, Blink. Nice coil pattern setting up here. And the final one, Driver 111, AQN. It's a utility stock. Big move on good volume here. It looks pretty good for follow through. Again, guys, besides this, remember some of those inverse ETFs like FNGD, SPXU, SQQQ, if the market does start to weaken. All right, that'll do it. Let's see what futures do later this evening. And again, if you sign up for Breakpoint Trades and you're new and you need some help, feel free to write in. We could have a phone call. We can also do a private Zoom to help you out. All right. Have a great rest of your Sunday. Take care.